Well, the CEO of African Bank, Basani Maluleke, says that the bank has been progressing in downsizing and modernising. She spoke to our reporter, Naledi Matlapeng, earlier today.
We pay higher rates than anybody else in the market, and we unashamedly say that. I think the values of the bank are to ensure that we create more value for our customers than they expect, which is in part why it is that we do want to pay at the top of the market. But I think also because we know that we're a new bank. You know, we are only now starting to offer deposits, and I think to be able to attract the right kind of market, we do need to pay for that.
The fact that your operating profit increased by 42% for the 6 months, what do you attribute this to?
We're providing less against the loans that we send out because we're getting a better quality of customer, we're taking better risk on the book, and as a result we hold less bad debt provisions against it, and that's allowed us to release some of that and to go into the book. And I think also we've been very good in how we've been managing our cost base over the last few months, which has also contributed to enabling us to get the better numbers.
What strategy have you adopted to reduce the credit impairment?
The easiest way for us to do that was to restrict our credit appetite when the bank was reconstituted post-curatorship. And what that practically meant was that we were unable to lend to the same customer base that we were lending to because they presented a higher risk than what we were able to take on. And in addition to that, we've also had to restrict our risk appetite a little bit further because of changes from a legislative perspective, in terms of changes made to the National Credit Act. And as a result, our credit is centralized. We review all applications through a single system that ensures that we only write loans to a better quality risk customer than what was the case previously.
Do you think that you've actually achieved most of the targets that you've set to achieve?
We still play in the kind of mass market to affluent or the middle market. That's pretty much who our market is, and I suppose the key is always to ensure that we continue to serve all segments of the market though, right? So while we can't lend to people we've been able to lend to before, we fully expect that our transactional product will ensure that we can still create value for them. We will sell products on that transactional platform that will be attractive to that market to ensure that we're still able to ensure that they have banking. Because the last thing you want to do is to completely exclude a whole sector of the market from financial services. And I think that strategy is working for us because this is what is the trend that we are seeing in the market. So all banks are seeing the same trend around larger loans, longer terms, as well as a better risk that creates for the bank.
What should we expect from the launch of your transactional banking by the end of the year?
The key has been to say we need to ensure that at the very least we provide everything that all the other banks are able to provide, and then of course to provide a little bit extra. So I can't divulge to you right now exactly what it's going to look like because we do want it to be a bit of a surprise, and we will be releasing more and more information about it as we get closer to the launch of the product. But I think the key is that it is a very digitally rich product. We've created a community banking product that enables people to run stokvels or to save together or to create the ability for people to bank as a team, which I think typically hasn't been the case or hasn't been available. So we're quite excited about it. I can't talk too much about it, but I'm pretty sure that when it does launch, it will create value for our customers.